The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Lovely to have you with us tonight. Good morning. Here we are. Hank down in Hunter Valley. It's loud and clear here in the Hunter. Great. Thank you for that. Hank and Peter, yes, it looks like it's got a bit of a Black Friday feel about it, I think. I think you might have seen the worst of the shorter term damage yesterday, though. We'll see. Thank you, Norbert. Welcome up in Canada. And boy, excuse me, what an exciting day to be with you. You might find it strange that I've called this Days of Wine and Roses when I start to prepare this webinar at the beginning of the week. But what we have, of course, is masses and masses of volatility. And the results for traders, for futures traders, if you know what you're doing and you're following the Daniel Code, you've got your pockets full. If you haven't, don't lose heart. Once volatility like this starts, it tends to go on for a good while, and I think there's going to be an endless trading opportunities in front of me. This is really going to be a trader's market. You can be sure of that. Okay, so let me see what we've got here. Albert's with us, tutorial guy. Alex, Anthony, Bill, good to have you with us. Carol, lovely to have a lady with us. Thank you for being with us, Carol. Chun, he's a new guy doing a tutorial. Almost through it. Daniel, Eric, George. Gig's a new guy, also about to start doing a tutorial. I just wrote to you a little while ago, Gig, to say our partners, Trade Navigator, are no longer giving out free trials to Daniel Code clients. You have to buy it, and they give you a refund in a month. Terry Knight says he's all set. Gig, you are all set. I just had a post from Terry, who's with us today. Very unusual to have the honor of Terry with us. Terry, of course, is not only the webmaster, he runs everything on the website for us. He's a great operator. He's been with me for a long time. One of the very few, I can tell you, who's lasted, but he's a great guy and a smart operator. Hello, Adrian. Great to have you with us, my friend. So what Trade Navigator are doing now, Gil, you have to subscribe to their service, and if you're unhappy, they'll give you a refund, guaranteed. So if you do need to sign up for futures, folks, remember, you don't need intraday data to trade the Daniel Code. Just ask for end-of-day data for futures. You don't need intraday data. Yeah, sure, Anthony. Please do. Look forward to it. Send me your email. Email me your phone number, I should say, Anthony, and I'll give you a call. Okay, let's keep moving. And JF is with us. Good to have you with us. And Jeff's, a few Jeffs. And John Chiwa. Great to have you with us, John. John Vega, Larry, Mark. Mark L., the big trader, Mark, who is probably one of our star traders, but he did a tutorial, massive results, and he was retiring and going to trade markets, but he's such a good operator, he got offered a job running another factory, and he's been off running another factory for a couple of years, but keeping up on his Daniel Code. Just let me write this number down, please, for you. Anthony, 242 322. I'll give you a ring in a couple of hours, Anthony. 0409. Yeah, got it. Okay, so Mark's going to be back in the fold, but he's had a couple of years of gainful employment as well. Mike, Mitsos, great to have you with us. Of course, the Murph's with us. He's always with us. Norbert, of course, up in that frozen cold north. Peter up in Warwick, the short-term trader guy. Another Peter, lots of Peters. Philip, Robert, Scott, we know Scott. Good to have you with us, Scott. Stephen as well. Sue Lee up in Cairns. Sue, lovely to have a lady trader with us. She's one of our very good traders. Did a tutorial with me. She said, I've been trading for the best part, I think she might have said about 20 years. but she said, I've never made any money. But she paid the fee for the Daniel Code tutorial and went through it, and she's one of our very, very best traders up there in Cairns. Good to hear from you, so I'm so glad you're with us. Terry Knight, our webmaster and general organizer of all things technical on the Daniel Code. I should say Todd and Trevor as well. Glad to have all of you with us. And it's a great honour to have Terry with us. He doesn't usually attend these webinars. He's pretty busy, and he's got 3 boys under the age of, well, I'm going to say under the age of 5 or 6. Time goes quickly, but they're not very old. But Terry called me this morning very early. Terry's a big basketball man and hockey as well, but he's a Canadian. That's where our office is, up in the south of Canada. And he was shattered to tell me that the, you guys will know what it means, I don't know, NCAA, something or other, the national, here he is, here we go, Terry's going to tell me what he was saying, that NCAA has been cancelled, and Terry is heartbroken and annoyed. So it's a big deal, but boy, oh boy, I mean, talk about drama, but if you know what you're doing and you're trading futures with the Daniel Code, they are days of wine and roses. The trading has just been blessed, and the money is absolutely enormous. And of course, as I often say to students, the business of trading is not to be right. The business of trading is to make money, and that's how we measure our success or otherwise. Okay, so let's move on, and got a lot to talk about. Markets are rational, orderly, and sometimes predictable. I show you this slide pretty well all the time, so you understand that we can predict some of these turns. And there's no doubt we predicted this high exactly to within 5 ticks to the day, and you should go back to the previous webinar called It Begins, to get the shorter term timing, how we found that high in price and in time. And I'm going to show you more of that today. So here's the news for today. Wall Street crashes 10% in worst day since 1987. Europe smashed. Boy, it's good stuff. And as Peter says, days of wine and roses indeed. Peter's a gun, short-term trader. He lives up at Warwick. Beautiful, beautiful part of the world in Queensland. Beautiful part of the world, yes. So Europe smashed. Why is it smashed? Well, because they're wrong. If you're long, you're wrong. If you were long and you didn't know that there was a Daniel Code blue line sell signal there, you're wrong. So remember, folks, we go through this. The major time cycles are solar. We sometimes talk about moon cycles as well, which are very, very interesting. But the dominant cycles are solar cycles. And within that, there are 6 sub-cycles. And those of you who've done the Daniel Code tutorial will know that the first lesson I take you to is don't believe what I say. Don't have to make any belief system in this. Do the math yourself. And I take the client through the whole run of the Daniel Code, how I found it, how I found the numbers, the ratios, which are proprietary to us. We're a very, very small business, and not many people know these numbers, but so the way it works is even more extraordinary than you would expect. So this is 6S, which is our newest trading system. It's a pretty fast-moving system, but here we are on, this is the S&P. So if you closed out all the current trades in S&P, we cover 11 markets in futures. If you closed out all those trades today, there's some part of $51,000 in profit. Now, take off from that a couple of thousand. We had a nasty double outside bar in the US T-bonds last night, which cost us a couple of $1,000. But, you know, swings and roundabouts, we're plus 51,000 at the close, or thereabouts, on our markets, which, of course, the big contributors being oil, S&P, Russell, fabulous stuff. Excuse me. You can subscribe to the 6S positions, and I'm going to show them to you in a minute. But that was what it's done on S&P into today's close, $27,300 in the current trade. Here's the Russell. It's actually made $24,200 since the high, and you can see where we entered and where we exited, plus or minus a bit. I always put that wavy line to say approximately. I don't actually go into actual cents and ticks and points. I just give you an estimate. Close enough, you can see what it is. Basically, it's some part of $24,000 in the Russell. I've been spruiking the Russell for a while to clients because the S&P margins have got so big, but the Russell's a marvelous market. Look at that. 24,000 on a reasonably modest margin, if anything can be called modest these days. So before we get there, I'm just going to break through this, and I'm going to show you, before I forget, the fourth seal. Let me see where it is, and here it is. It should be your constant reference, the Daniel code, and these are sixes, I should say. This is our trading system, the sixth seal. Have a look at this, folks. There you are. You can see all of the trades that we're in, what happened yesterday, and what the orders are for today. And you can see $1,400 in the US dollar. This all in today's close. Everything's on one contract, of course. 6,500 into today's close in gold. 15,700 in the Russell. 22,750 in the S&P, and 2,300 in each of soybeans and sugar. And these orders set out what's our current position. You pretty well read them from right to left, I guess. What's our current position, where your entries are, what the buys are, what the stop losses are. And it's a fast-moving program, but you can see it has done and continues to do extraordinarily well. Okay, back to where we were. And this is the fourth seal, which is prepared for me by Frank DB. Frank is a Belgian gentleman. He's actually a farmer, but he came to me in either 2010 or 2011 to do a tutorial in Taupo, New Zealand, and he had his fiancée with him, Anne, very charming young lady, and that was the first year that I taught the fourth seal, and Frank got absolutely hooked on it, did tons and tons of work on it, and became a real a man who picked bottom gets smelly fingers, says Peter. Well, that's if you don't know what you're doing. That's quite right, but you don't know how long you've been with us, Peter, but we picked the 2009 bottom to the tick, and with 3 ticks away, actually, and to the day. And I was running a tutorial in Taupo at the time. Plenty of people can verify that. Everyone now says they picked the bottom, but we picked it about a week ahead. Okay, so let's move on. This is Frank. You can see this. This is the S&P Index. And you can see all those ominous 59 cycles on top, and they tend to give you tops. So that was his comment for that week. This is the 24-day chart here, also of the S&P, and you can see there's not a lot of major support underneath it. And this is what Frank's written, and you can see he's talking about kaboom, nice trade or not. Of course, I told you a month before the top that in a webinar here, saying now you need futures and forex. In other words, that whole webinar, you can see it. It's on the homepage. We're saying that there's going to be volatility, and if you're just sitting there on stocks, you're going to be sitting there looking fat, dumb, and stupid. Get hold of trading futures. I mean, you have to understand, as I'm sure you all do, that stocks is an institution, but it's also a racket. I mean, buy and hold, buy and hold. Here's this market crashing, and all of the wise heads who get media saying, oh, yeah, buy and hold, a good time, buy more. Well, maybe yes and maybe no. But if you learned to trade futures, you wouldn't have to worry about all of that. Suhasini, who's a reasonably new client, she did a tutorial with me maybe a year or 18 months ago, wrote to say, thank you, I got out. She had a big stock portfolio as well as trading futures intermittently. She said, thank you, I got out right at the top, all of my stocks. Dumped the lot as soon as that Forex, blue line and TO3 sell started biting view at what I've been saying for the last month. But here we are. This is what Frank's had to say about it all. And have a look at this. This is the S&P. This is actually the E-mini chart. I want you to have a look at this very carefully. I'm going to just bring up a button here so I can show you this in more detail. So this is the start of our time cycle, and you'll remember me saying, I've said it for years, good places to start time cycles are the high before the high and the low before the low. And if you followed our work at the previous webinar, It Begins, you can see how we used that. I gave you the detail of how we did it to find the February high to the day. Pretty terrific stuff. This is in fact a daily chart, and we don't usually use time cycles on this in this manner, but it's just been so powerful, I want you to be aware of it. So where we start, that's actually a swing high. So that's a high before the high. There's a high there, and this is the previous high. So this is a high before the high. And we start our time cycle there in 59. For those of you who know, it's one of the most powerful time cycles. It's twice time. In the Daniel Code lexicon, time is 29.6 days. And we don't have to worry about the decimal points for reasons that I explain in tutorials. But in the round numbers, 59.3 is times, twice time. And on that first, we started on this on a high before the high, and first 59. This gave you a swing low. It's covered by the bar, I'm afraid, by the 59-day line. But we got a swing low there, and then at 89 days, which is half of 59, and it adds up there. It says a half. It's actually 1.5 from the start, the way the program works. And that gave you a swing high. So from where we started back in end of March 2019, we started our time count. The first two periods out, the 59 and the 89, both gave us a vibration. In other words, they found a swing low and they found a swing high exactly to the day. Now, this stuff is valid for plus or minus 1 day. In an extraordinary manner, it finds it usually to the day. So once we had that 59 and 89 cycles in, we knew this was a valid cycle. So put these cycles on, and there are an infinite number of cycles. So what we're looking for is, A, to start from a valid point, and secondly, we're looking to see the cycle prove itself to us. In other words, we want to see a vibration on the first 1 or 2 or 3 time cycles out from where we've started. If we can get a valid vibration there, that tells us the cycle is valid, in which case we continue it. Now, those of you who've been with me for a while and done previous webinars, Vicky's arrived. Vicky, lovely to have you with us. I'm always thrilled to have ladies with us. We don't have many, and we certainly treasure them, so welcome. Those of you who've been with us for a while have seen how we picked that 2009 low to the day, and at 666, because that was times. It was a repeat of the 59 time cycle, which had already given us the 2007 high. So we got two of those cycles vibrated. We got a high and a low, swing high, swing low. So we knew that that cycle was valid. So we moved on all the way. You can see nothing happened there, nothing happened there. A couple of days off a high there, 1 day off a low there. We call that valid. This is valid for plus or minus 1 period. And look where the three time cycle came. Okay, that's actually the closing high in that bar. It's a bit obscured there, but that's what it is. So we had time exactly, we had it a long time beforehand, and let me find my cursor again if you'll bear with me. Well, it's going to give us drawing tools. I don't really want drawing tools. What we want is our cursor anyway. We'll have to move on. That one's there. So on the 3 times, those of you who know about the Daniel Code, comes from the book of Daniel in the Old Testament. And this is the important part in chapter 12. We swear by him that liveth forever, that it shall be for a time, times, and an half. And here it is. Time gave us a vibration. Time and a half, where it's got the 89 days, gave us a vibration. The 2.5 times gave us a vibration 1 bar late. And 3 times the original number gave us the high. And we've known about that, as I say, for quite a while. Okay, let's move on. Here's some more ways to find the 2020 February high. This is the chart, and you can see, look at the money here in 2 trades. I've just shown the two straight down easy trades. You just about broke even on the little 3-day counter trend there. 18,000 in the first run down, 26,000 in the next run down. I mean, that's some sort of money, isn't it? So I hope you got the fill of it. It's $44,000, some part of 44,000. But look how we found it. First of all, we had a really simple trend line. That's the top line. It just ran from the swing low in middle of May all the way up, and it went through the highs at the end of January. So that's a 5th seal line as well. It moves from in fact, it's not a fifth seal line. Yes, it is. It started from a low before the low, and it goes through a swing high. That's a 5th seal line. It's also a really simple trend line. The bar below it is a 4th and 5th seal line, and it's also a moonbeam because it has multiple interactions with the key levers to create the 4th seal line. And that's why it's got a little dot on top of it saying moonbeam. We found these extraordinarily important in time cycles. So here's a 24-day chart now. We're moving on. This is also the S&P Index. And you can see the 4th seal line there goes right through the high. It shows that March was the month. February high, almost exactly to the tick. And interestingly enough, you can see on there the blue lines. This is the 24-day chart. The blue lines, you can see their standard deviations from the mean. The darker colored line is the median or the mean. It's actually the mean. And the lighter numbers above it, lines above and below it, are standard deviations from the mean. Now, these are not your normal mathematical standard deviations. These are Daniel Code standard deviations. And you can see that high came in at 1, 2, 3, 4 standard deviations above the mean. And we talked about it at the time, and I told you that markets find it very hard to stay up at those lofty levels. They're really extreme levels for markets. And there was the high right there on the 4th seal line, and it started coming down. And where's it going to? Well, I've shown you some of the retracement levels there. And interestingly enough, we've got 3 different lots of potential retracements here. And I'll show you them in more detail as we move along. And remember, that's a 24-day chart, so don't get overly excited about it. This is the mini on a 6-day chart. And what we've done here is we've actually started our count from the 2007 high. In fact, we started it. These are 6 trading days in every bar. This is our 6-day chart, the Daniel Code week, if you like. The magic number for markets, Gann used to say, if you are worthy, I will tell you the number. And if you shelled out equivalent of about 2 Buicks he wanted for that information, he would say, I'll tell you the number, and then he'd tell you the number 7, which of course it's not. But anyway, he was a great marketer, no doubt about that. But this is a very, very important chart, because if you have a look at this, this is our original S&P chart that I've shown you over the years. And it starts at 59 periods before the 2007 high. And once we got that vibration, we looked for it to repeat. And the next 59 period, which by now the market's showing it as 118 periods or one, that came exactly at that 2009 low. That's how we forecast it. And we had that number on the chart weeks and weeks, maybe even a month before that low came in. And the Daniel Code blue line was at 666, which was effectively the low. So this is our original time cycle that forecast the 2007 high and the 2009 low. And what we've done is we've continued it all this time. It's moved along. Some of them have been okay. Let me get my little highlighter here for you. Spotlight, it's called. This bar gave us a terrific vibration. This was the perfect vibration. This was the big deal, picking that 2007 low to the tick and to the day in front of witnesses. Everyone says they picked it. We actually did. Okay, so what happens then? Look, you get a really good vibration there. Nothing much through here. That actually is the swing high of that. This is a couple of days too early for the swing low. Nothing much through here. That 7.5 gave you the minor high here. This is the February 2018 high. This next one was important. This gave us the big pullback down there. I've talked to you about that. And look what it gave us. We just keep it going. This is 9 times, and there it is. On the day. That is to the day. 0 variance on the 6-day chart. I mean, it's absolutely extraordinary, and it's great that you can see that. Those of you who are interested in this stuff, and of course, that's not what we're trading. We're not trading these big time cycles because, as I say, there's 6 daily bars in every one of these bars. The risk parameters are so big they're not effective. You can't really trade them. But when you know you've got a cycle coming up, that's when you go to the daily charts, which we create for you all the time. And it seems like all the time. Normally I do them 3 times a week. This week it's been every single day. And after this webinar is over, I've got to redo the Forex and the future charts. Well, the futures charts at least have run way off the existing members chart, so they've got to be redone yet again. That will mean every day this week. But that's just brilliant stuff, isn't it? I mean, it's extraordinary. We don't trade that, but because the risk is too big on it, the size of these bars. But when we know we've got a time cycle, we get really focused on the daily signals from the Daniel Code, and we wait for a Daniel Code signal on the daily charts to pull us into the trade. And that's how it works, and that's exactly what Frank's reporting on to you with a slightly different format. There it is. It shall be for a time, times, and an half. If you'd like to read about that, I know most of you, a significant portion of you get very cranky when I talk about the Bible, but there you are. This is a reality. It doesn't really matter at all what your faith is, because this particular part of the book of Daniel is all about mathematics. And in any language and any religion, 2 and 2 makes 4. That's the beauty of numbers. They don't vary in their meaning. They're exact. They're precise. And it's a light switch solution. It's either on or it's off. And all of the Daniel Code is a mathematical matrix that comes from the book of Daniel. So there you are. You might be interested in looking at that, reading the whole of that section. This is the same chart in more detail. I want to focus on it for the fact that 980 days gave you the actual daily bar. This is the 6-day chart, but it gave you the daily bar as well, which I've shown you. And that is the closing high of the whole bull market. Pretty fantastic, isn't it? That was the week ended February the 18th, and there it was. On that same time cycle, when I started this business in 2008, some of you have been with us since then. I know you saw probably one of the first articles I wrote. If you'd like to read about it in more detail, go to the Daniel Code website, click on articles, find the article that's headed "The Number of the Beast," and that tells you the whole story about how we found that low and the people who were doing a tutorial in Tapo at the time, and a few other weird things that happened at the time. It's pretty extraordinary. It's worth a read. It really is. Okay, let's move on. So we found that 6-day bar exactly and to the day. This here, folks, this is the daily chart of the S&P. And this is the chart that was published on February. It was created on February the 19th and posted in the members' charts. And it's that last blue line there that you can see, the last bar going up to the blue line, 3395. That created the blue line sell signal valid for the next day and the day after, and also a TO3 signal. Now, the blue line signals are contained in our TO3 Plus suite of orders, and they include the blue lines. The blue line trades, we call them, are our most powerful trades, and they're the ones we expect them to hold and go further. It doesn't always happen. Remember, everything to do with trading futures is trading probabilities. There are no certainties. But we know that the blue line trades have additional qualifications before they're called a blue line signal, and they are the strongest trades we have. And they're the 19th. For the next day and the day after, we had a TO3 and a blue line sell. And we can't make it much stronger than that, given that we had already told you, it begins, you'll see the commentary from Frank and my comments that we were at an unsustainable position in the S&P. And it wasn't just all this S&P. That's not just wine and roses. A lot of other markets contributed as well. Have a look at this. This was crude oil. This was the members chart on February the 19th. That big bar up that looked like it was going to go forever, that created the blue line trade and the TO3 sell signals for that bar. And you want to see how accurate this stuff is, I can tell you. It's absolutely extraordinary. I'll just find the chart here. And that big up bar there had a high of 53.87. There's the blue line, 53.70. The close of that bar was 53.74. Now remember, Daniel Code signals are valid at the bar, high, low, or on the close. And at 53.74, excuse me, we had a 4-tick variance. In a market that's trading, as this market was at $53.70, that's 5,370 ticks. And you've got a variance of 4 ticks. That is 0.01%. Extraordinarily accurate. These are not approximate. These are the numbers that rule markets. And they are not Fibonacci numbers either. Okay, so, and then this is what crude oil did. We had a blue line TO3 sell there, was elected, down it went. Have a look at the next bar. That was the last bar you saw on the previous chart, was the high bar. The next bar, which was Thursday, February the 20th, the close of that bar is 53.73. The open of, there's your 3-tick variance again. The open of that bar, 53.70, exactly on the blue line, 0 variance. Pretty extraordinary stuff, isn't it? Down it went. The open of the next bar was also 53.70. Down it went, 640 ticks in that trade for $6,400. 1.5 bars counter trend set up the new sell signal, and down it went, 15,900 for the second part of that trade. Some part of 22,330 per one contract. All there, all posted on the website. No pretending about it. That's where it is. So goodness me, what's happened here? Okay, so we got something funny happening here. Right, so why did this all of a sudden get big? Let me see if I can change this. If I can't change it, folks, and I guess I can't, I'm going to have to, I think, close the program and start it again. No, there it is. It's come back. Thank goodness. The joys of technology, Terry, as I say to you. God, what a business. So there were our two crude oil trades there. Now, we're back now to the 12-day chart. This is another variant of the same theme. There's your high at 33.95 from the Daniel Code blue line on the members charts, available for all of you members to see. The closing high, the blue line was at 33.95. The closing high of the signal bar was 33.93.75, 5 ticks away. And there's, in a market, in a number like this, 33.95, there's 33,000 ticks in there, 3,000. There's 33,000 ticks in there. Extraordinary. I know this is the index. It's like a hair. It's less than a hair, the variance. And we had that. Now, have a look what's happening with these other lines. So there are your blue lines. That's the Daniel Code trending channel, which this market's observed religiously since its low in March 2009. And you can see that it's got up to 4 standard deviations from the mean. The thicker blue line is the mean of this whole price pattern. I mean, if you think prices are random, I mean, have a look at this. It's just so perfectly perfect to be hardly true. You can see when it got to 3 standard deviations from the mean back in February 18th, it hit that number to the tick, and that caused it did have a slightly high after that, but not on the linear chart. When you look at this chart, you're not looking just at a horizontal line. You're looking at angles, and these angles are all part of the fourth seal. An angle has both components of time and price. Every angle, every spot, you have components of time, price. So on that basis, that second high up here, this was actually a lower high on the linear chart. But here you are, it hit that fourth seal, and look where it is today. 4 from the high. This is now 1, 2, 3 from the low. Look where it stopped, almost exactly to the tick. What part of this is unclear? I mean, markets are actually trying to talk to you all the time. They're trying to tell you what they're doing. Problem is, we don't generally have the language to understand them. With the Daniel Code, you'll go a long way towards understanding markets. I say to people doing tutorials, the markets are talking to you all the time. They're trying to tell you what they're doing. Here was a little bit extra, wasn't it, for the wine and roses? We could buy more roses and plenty of wine. 8,630 from a TO3 sell signal. It was just a handful of ticks away from the blue line, but it had already put its reversal in. That was it was not quite a key reversal bar at the high, but it was close enough to have had a technical issue missing. It hadn't opened within the range. But look at that. Another $8,000. I mean, goodness. And it's not just futures. This is the trade we had, a blue line and a TO3 sell signal in Forex, in the GBP USD. When we started this business, or when I started this business in 2008 with the website going public, we had a lot of Forex. I used to do a lot of Forex, and it started off as a futures and Forex site. And I tend to concentrate more talking to you about the futures, but don't let me give you a false impression. 50% of this website is Forex, and it works exactly the same. You have the same members charts, you have the blue lines, the red lines, and look at that high up there. I want to tell you something about that. That was... that high of that bar, which was March the 9th, that high was 132.00. Look at the blue line, 131.91, 9 ticks variance, less than 0.1%, significantly less. That's what creates target recognition. Now, this stuff goes on all the time. I've been doing it for years and years, and some of you have been with us for the last 11 years. So if you have any doubts about it, please go to the Daniel Code website. You'll find a link there saying Chart Archives, and you can look through the 30,000 plus charts that I've created over the years. They're all created by hand. They're very slow to do. They're a bit hard to do. It just takes time and concentration. But sometimes time is the hardest thing to find, isn't it? So there was our existing trade on GBP USD, 4,850. Lovely lolly, as we used to say. This I'm showing you is the 24-day chart, the really long-term chart on the Australian dollar, US dollar cross. And for 2018, I told you this would be, remember at the beginning of the year, I give you my wild guesses for the year. I said in 2018, this would be the best short of the year. In 2019, I said it would be the best short of the year. And in January this year, I told you it would be the best short of this year. And I said it's going to have to get through all those black numbers, those black lines, which are the last level of support and resistance for any swing. And it's going to get down to that low at 60.08. And it's on its way to trying to do that. It's got a couple of blue lines to deal with first. Doesn't mean it's going to go straight down there. There'll be intervention. The government Reserve Bank has some control over this currency. But there it is. What a great short. Look at that. Okay, so what do you do now? First of all, follow the Daniel Code signals. Most importantly, in these big ranges, manage your stops. The DC program relies on wins being 2 to 3 times the losses on average. It doesn't have a particularly high win percentage, the Daniel Code trading program that you learn at the DC tutorial. That's by design. I can give you a trading program with a 92% win rate. No trouble, easy to create. It doesn't make much money because the rules become so restrictive, you don't get a lot of trades, and you miss those big surprise trades. But the present, what I teach you at the Daniel Code tutorials, it doesn't have a huge winning percentage, and I've designed it that way so we get a lot of trades, and our winning trades are somewhere around 2 to 3 times the average losses. So you can work that out yourself. You make a ton of money if you get this thing right. With these big ranges, be really careful with your stops. If the risk is greater than 1.5 times ATR, that stands for average true range, use a fixed dollar stop equal to 1 or 1.5 times the average true range. If you're in a really big runaway trade and it's getting dramatic, don't be frightened to make that a trailing stop. Getting stopped out of a trade is no sin as long as it's profitable. Now, the average true range, the ATR tool, it's in Trade Navigator. You just go to the Add a Study, go to Indicated, it's called Average True Range, add that. The default setting that Trade Navigator have on is 7 days. Don't use that, it's far too short. I use 225 days, but that's because I'm lazy. I don't want to see this average true range jerking around all the time. But if you want to get close to the market, you can use 89 days. You can even use 59 days as your period. So make sure when you get that tool on, you change it. Just go to Edit Chart Settings, right-click on the number 7 when it tells you the period, change that to something longer. I use 225 days because I've been doing this a long time. I don't really get too excited about volatility and drama, and I don't want to have to be changing my average true range number all the time. But make sure you're aware of the average true range for any market you're trading, and never use more than, allow your stop loss, your risk on entry to be more than 1.5 times average true range. And that's because the sequencing of the Daniel Code is you have X number of trades, a bit more than half are winners, but the winners are 2 or 3 times the losses. And what you're trading always is the average true range, because a typical entry, you're buying the true high plus 2 ticks in futures, 5 ticks in Forex, selling the true low, that becomes your if done stop, or your OTO stops in the new language. So the average risk you're taking all the time in your normal trading is 1 ATR. You don't want to start getting out to 2 or 3 times ATR on any trade, because if that trade's not successful, you lose not just one trade, winning trade, your loss is 2 or 3 times or more what your average winning trade's been. So keep that under control. And if you're uncomfortable with these big ranges, and I can understand why a lot of you are, if you are uncomfortable, stand aside. Being flat is a valid position. If you're not comfortable, just stand aside from that market. Plenty of other markets that haven't got quite so much volatility in them. So where is this thing going? Okay, well, this is the same chart that you've seen a couple of times now. And the big bar down, I'm going to show you this in more detail in a moment, it stopped right at the first. There are 3, in fact, there are 4. I haven't even put the 4th on. There are 3 swings. And the first thing this market will do is correct the swings. And it has to start, of course, by correcting the closest swing, which is it's on its way down there now. The next swing goes down to the September 2015 low. The next swing goes all the way back to about April 2011. And the final swing, which is not on here, is the 2009 low. So you can see those numbers there, 2461. Here's a bit of a closer line for you. Now remember, the DC channels and the DC retracements are support. This is only a 12-day chart. The last one was a 24-day chart. Well, it was 12 days. Well, I'm sorry. You saw the 24 earlier. The numbers that are on the daily charts are the most powerful. But these are not bad. You can see when this market at its first bar down, which was this outside bar that started this whole runoff, look where it stopped. Okay, that's that right there. You can just see the start of the solid blue line there. That's the median. That's the mean of the whole move up since 2009. That's the mean of the entire move. The market knew that. You didn't know that. And most people don't think of these things. But there it is. It came down last fortnight, 2 weeks. I say fortnight occasionally. It confuses Americans. They don't use that expression. It means 14 nights, or a fortnight is 2 weeks. Using a 12-day bar, this is virtually a 2-week chart. It's Daniel Code Lexicon's 12 days. Look where that previous bar stopped, the outside bar. It stopped exactly on the extension of the median blue line, which has been in place. It started in March 2009. Here we are, 11 years later. The market knows exactly what those numbers are, and look where that outside bar there stopped. At the median to the tick. And look what's happened now. We've got the next big bar down, and on the first correction of the first range, there's a Daniel Code black line there very close at 2461.74. And that's almost perfectly going to intersect with time and price for the standard deviation. That's 3 standard deviations below the mean. I don't know if you follow that, but this is the median here. So this is 1, 2, this is 3 standard deviations below the mean. There's your Daniel Code black line at 2416. And that's going to coincide almost exactly with support from the Daniel Code trading channel and the black line, which is the last level of support of the operating swing for this time frame. Okay, and this is going from the high down to this low here in December 18, late November, early December 18. That doesn't mean, of course, it has to correct the first swing first. That doesn't mean that that's going to make a turn. You're going to have all these numbers that give you target recognition. You get a vibration. The vibration can be 1 bar up, or it can be it goes to the heavens. Nothing in the Daniel Code signals or anything else talks to quantum. However, when we stack up more and more probabilities, which is what I'm showing you here, fourth seal lines, trend lines, time cycles on the 24-day chart, time cycles on the 12, time cycles on the daily, you get a very much bigger, stronger preponderance of effort. So have a look where that arrow is down the bottom. If it breaks that support there, the next support is down around the fourth standard deviation below the mean, as well as the Daniel code numbers. But I think there's a big probability this market takes a breather down here somewhere, not far away from the Daniel code black line. Okay, let's see what happens. This is Isaac Newton, Sir Isaac Newton's law of motion. What am I talking about? Law of motion says any object set in motion will have an equal and opposite reaction in the other direction. So that's what I've been talking about with this stuff. With 4 standard deviations above the mean, we can see that if you look at these dotted lines down here, 3 standard deviations from the mean at the moment on the downside. If we've gone up 4, well, first thing we think about is going to go down 4 standard deviations. The level of the 3 standard deviations from the mean is 2,480. 4 standard deviations from the mean at the moment is 2,336, or thereabouts, plus or minus a few. I'm just doing that by eye. But because these support lines, these Daniel code trading channels, are an angle, as time moves on, the prices get higher. So where we are right now on the present bar in the 12-day chart, 2480 is 3rd standard deviation below the mean support. 2336 is the 4th standard deviation from the mean support. In other words, it's where these intersect right here. And right there, we're just about there. Okay, this is the 6-day chart. Make sure you've got everything in front of you. The daily charts are best. They're updated all the time. When you go and look at the futures charts today, you'll see they've run off the members charts pages. I'm going to upgrade them for you when I finish this tutorial, this webinar I should say, and Terry will, my guess, 9:30, he might be able to, 9:30 in where Terry is, East Coast US time, he might get this posted for you this evening, I hope so. This is the 6-day chart. Have a look at this. The red lines are either 4th seal or 5th seal lines. There is a red line that goes exactly to today's low, which is very near that black line at 2435.75. That is a serious level of potential support. The next lines get you right down near that 2179 number in price. Don't forget, that's only price. When you look at the Daniel code trading channels, which we've just talked about, that's time and price combined. Okay, this is US T-bonds, folks, and I just want to show you this to show you, have a look where T-bonds have gone to. I've been showing you this chart for the last 11 years, and it starts from 1998 and 2000, February 2000. Here we are 20 years later, and look at it. It's gone mad up the top, but where's it gone to? Almost exactly the upper red line. It's broken through it a touch. It hasn't done that before, but that is sure to be very, very serious resistance on this market. I haven't updated the time cycles on this yet, so don't get excited. There's some minor time cycles that are not on here, but we've had terrific trading in T-bonds lately. It's been marvelous until today. Today was a bit of a shocker, double outside bar. Doesn't matter. We've made 51,000 in current trades in our 6 seal trading, and I've shown you all the trades in the blue line, the TO3 and the TO3 plus signals, which give you the strongest of those signals. Now, all of this stuff, folks, you could learn this and do it for yourselves. If you want to be a super trader, please email me, jneedham@thedanielcode.com. Send me your phone number and your location so I don't call you in the middle of the night accidentally, but I will give you a call and talk to you about doing a Daniel code tutorial. The knowledge of understanding everything I've shown you today, plus much, much more, is invaluable. It's the greatest gift you can give anyone in your family or a friend. So please don't be shy. If you know anyone who's interested in trading, please send them to me. Those who've been with us a long time know they'll be well looked after. So that is that. If you haven't already had a free trial of the Daniel Code, you're most welcome. Just go to the Daniel Code website, hit register, follow the prompts. Any troubles, any issues, contact Terry at support@thedanielcode.com. And I've changed the Trade Navigator side of this page to say we can arrange a trial of Trade Navigator for you, but it's no longer free. You have to pay their first month. You will only need futures and Forex, maybe only need futures, but end of day data only. It's the intraday data that's expensive. You don't need that to trade the Daniel Code. Once you start live trading, brokers will give you free data anyway. Here's compliance, folks. I'd like you to read this because I've told you many times. Trading, it looks easy. I make it look easy, I think. But don't forget that's 30 years of experience and learning behind that. It's not easy. It's easy to lose money is what it is. Before you start trading real money, I beg you, I implore you, do not risk real money until you have been able to prove to yourself that you know what you're doing. Better still, do a Daniel Code tutorial or go to the Daniel Code website. Follow the signals. They'll keep you out of trouble. They might even make you a lot of money. And that's about it from the website today, folks. We can get out of all of that. And I've got a couple of questions. Jeff enjoyed that. Good on you, Jeff. I hope out there in the middle of America where you are, Jeff's a farmer out there. Hope things are looking a bit better for you. Mike, gold was you beauty today. Murph, he's a tutorial guy. And on the way, he's learnt my language. Australians say, you beauty, when they've had something that they really admire, like a really, really big bar, which is great. So that's it. Mike S., don't give up on me yet. No, that's good. Come back, my friend. We need to progress with that. What is the death cycle, Peter Mack? The death cycle is 59 on a 6-day chart, 59 6-day periods, high to high on the first hop. In other words, it's not an extension of the hop, which we've had here. Just let me very quickly bring up that chart so I can answer that for you. Here we are. This is a 59 cycle. This is, I'll open this up so you can see it a bit better. Just bear with me. Okay, so this is a question from Peter Mack. Peter, this is a 6-day chart. These are the starts of time cycles. This is a 59 time cycle. It started from a swing high before here, and it ended right on the bar that gave us the closing high of the 2007 top. That's 59 cycle on the first hop. It then on the second hop here, which in other words, there's the first 59, there's the second 59, it's 118. That gave us the 2009 low to the tick. And now this has gone all the way through here. And at 9 times that cycle, it's given us that high to the tick. But that's not the death cycle. The death cycle has to be on the first hop. In other words, it would start 59 periods from that high, and that cycle just not there. Okay, so if you'd like to learn about that, shoot me an email, and I'll be happy to talk to you about doing a Daniel Code tutorial. I teach you how to do all of this stuff on your own. If you're interested in that. Thank you, Jeff. Good to hear that, Murph. A beauty indeed. Good on you. Mike, you don't give up. You're coming back. Good. Look forward to hearing from you. That's great. Sue says, thanks, John. My education has been valuable. You're so kind, Sue, and I'm thrilled that you're enjoying your trading and doing so well. Here's Hank, good friend of mine down in the Hunter Valley, and his son, Justin. Don't know if Justin told you, he is now a dad of a boy 11 weeks ago. Well, there you go, mate. How wonderful for him. I think he told me, and I think I sent him my congratulations, but if I haven't, please pass that on to him. That's terrific. He's a lovely guy. He deserves all the happiness in the world. And here's Peter: if Forex traders haven't doubled or trebled their accounts, they need to re-examine their strategy. Absolutely right. Way ahead. And I'm glad you enjoyed it, Peter. Okay, so I think that's all the questions for today. Might be one or two more. Oh, there are. Juan, yes, Juan enjoyed it. Smashing, he says. Good on you, mate. Akshay, longer-term trends in equities remains up. Well, it is at the moment, Akshay. It sure is. And Hank's good. And Juan says, yippee, yippee indeed. Quite right, mate. Okay, folks, all the best. I would normally say to you that it's just gone 11:30 in Queensland, the beautiful state of Queensland down under. And I placed my orders for tonight's trading, so I'm free for the day to have a couple of Bloody Marys and head for the pool. Unfortunately, that is not the case because I have to update the member charts again 5 days in a row. So that'll be the next few hours getting those updated. But anyway, thank you. Thank you for being with us. Good luck. Let me know if you'd like to do a tutorial. Anxious to teach you. We get great results, as all our clients who are here can tell you. Okay, one says, you get working, stop blabbing. Absolutely right, my friend. Couldn't agree more. Cheerio. Good luck. Talk to you soon. If this volatility continues, I will likely have another webinar next week, which is normally there every 2 weeks. I'd like to stick one in next week just to make sure you're all up with the play. All the best and enjoy your weekend, folks. Bye for now.